Hello everyone and welcome to IBA's Market Update webinar. My name is Melissa Wybrow, Marketing Manager, and I'm joined today by Phil Seymour, CEO and President, and Mike Yeomans, Head of Valuations. And thank you everyone for joining us today. In this session, we're going to cover OEM performance, lease ends, airline failures, storage analysis, an update on the 737 MAX, the regional market, and values and lease rates. So we've got an awful lot to get through. We've included as I said, a lot of information here, some of which we're going to go into detail, other bits we will just skim over, and obviously you can look at the slides in your own time. We will be sending a copy of the slides out to you in the next day or so. So let's get started. Mike is going to kick off with some scene setting and a quick look at the trading environment. So Mike, over to you.
Thanks very much, Mel. So yes, as Mel mentioned, we'll start and look at the macro environment. First, we're going to have a look at GDP and interest rates and what those are doing. As Mel's mentioned, there's quite a lot of information, quite a lot of slides, so we probably won't go through all of this in detail. But generally, the outlook for GDP has some downside risks, particularly in the US and interest rates. There's a call, particularly from the president there, to cut the Fed rates, which we might find happens perhaps tomorrow. So we'll wait to hear what happens there. There are a number of geopolitical risks, which I'm sure we're all aware of. The US-China trade war, which is ongoing, that's had various effects, including effects on freight traffic. We have also, particularly in Europe, but maybe has some wider effects, the threat of Brexit, or a no-deal Brexit, or no Brexit, or whatever happens there. And lately, the US-Iran situation with the Saudi oil production facilities having been attacked, which has led to some increases in the cost of fuel, which is what we look at on the next slide. So there were some sort of fairly bearish outlooks for the remainder of the year for fuel, but it took over the weekend a 14–15% jump up to 69 or just over $69 a barrel, where it was as of yesterday. So you can see, it has been a relatively low oil over the past few years and showing some signs of increase. And perhaps we'll see that stay at a somewhat higher level for the rest of the year. It's as yet unclear to us how long it will take to get that production back on track from Saudi, but certainly the threat of wider volatility with the political climate.
If I can just add a bit there, Mike. I mean, we were looking earlier today at the airline hedging, fuel hedging policies, and did actually we noticed that a substantial amount of hedging had taken place at relatively high figures. We think a lot of airlines have hedged. They were expecting oil to perhaps get much closer to $80–90 a barrel when they decided to gamble on that hedging. But it'd be interesting to see how people enter their forecast for 2020 to see if that changes.
So next we're going to have a look at traffic performance. We're still seeing very high passenger load factors. We have some IATA figures, a few charts on the screen here. So on the top right of the screen there, you see the passenger load factors in July 2019 versus 2018. So on a sort of industry basis, we're at an all-time high, about 85.7%. Some differences across the regions there. Asia Pacific pretty much where it was exactly last year. Europe slightly strengthened as well, but generally across the board we're seeing stronger load factors. On the passenger side, we have seen the cargo load factors fall. As we mentioned, we've seen traffic falling there. Some differences in July, that's the latest figures that we have from IATA depending on the region. International RPKs have fallen compared with June, pretty much across the board, but domestic markets performing somewhat better, particularly in China and India, which showed very strong growth in terms of the domestic revenue passenger kilometres. Next, we're having a look at yield. The yield decline appears to be stabilising. This is a chart that IATA shares and we like to reference quite often since 2011 and how yields have performed since then. We've seen pretty much a steady decline in terms of the economy class yields. That's a factor of competition, but also it's just the base airfares that we're including there and not the ancillaries. So a shift more towards ancillary revenues from low-cost carriers and other traditionally more full-service carriers now charging for things like food, sandwiches. So that has contributed, but we're seeing that sort of flatten off over the last few months. We're going to have a look at what's happening with the OEMs now.
Yeah, well, it's probably been or dare I say, an incredible year, really, in terms of OEMs. I think we've seen a number of production issues. The supply chain has been creaking. We've had issues, haven't we, with the Trent engines. We've had some issues with deliveries of engines for the Neos and of course the Max that we've got a section on later. But is it safe to say the big two, Airbus and Boeing, have been under some pressure this year?
Yeah, I mean, if you look at the figures compared, sort of the year-to-date figures this year with last year, January to September, both Airbus and Boeing are down in terms of the number of aircraft orders. I suppose the only sort of positives in terms of the movements in orders are ATR have garnered more orders than they had to the same point last year. Embraer has as well. More recently, we have seen some orders from Comac for some of the larger Chinese airlines for the ARJ aircraft, which has got a significant order book, but perhaps struggling a bit more in terms of the delivery side of things.
Yeah, I mean, I think there's, of course, the OEMs tell us, well, let's just see how things turn out at the end of the year. But it's, I think the last, calendar quarter coming up, I think it's going to be, tough to see overall orders being higher than 2018 for both Airbus and Boeing.
Yeah, I think, we're looking at the macroeconomics. We're moving into a seemingly more volatile period. There's already very long backlogs. A lot of lessors have long backlogs of aircraft. Obviously, the Max is grounded, so not perhaps so surprising that we see some slowdown in orders.
Okay. I suppose that follows through with deliveries. So the Airbus seem to be almost matching last year's production rates. Is that reasonable?
Yeah, very, very close to last year's production rates in terms of where Airbus is. Boeing, naturally, as you'd expect, with the Max aircraft grounded and unable to deliver the aircraft that are being produced, the number of aircraft Boeing's delivered is much lower than last year. But we'd expect to see that number recover once the aircraft re-enter service and are able to fly revenue service again.
We've had a question already, Mike. I don't know if it's fair to put you on the spot so early in the webinar. Can you just clarify Airbus and you've got Airbus and Bombardier here. So right. Where do we treat the A220 in our figures? Is it an Airbus?
Yes, that will go into the deliveries for Airbus and Bombardier aircraft, which would have been the Dash 8 aircraft, which were formerly Bombardier, will now go into de Havilland.
Okay, good. Yeah, good point there. Obviously, somebody is quick off the mark to ask us questions, but if you've got any, let them come in. We do have 48 slides, and we're at slide 11, so I think we're making reasonable pace. Back to you, Mike, on the on the next slide, shall we? Orders and
Okay,
deliveries
yeah.
January to
Let's
September.
have a look at the next one. So this is looking at the book-to-bill ratios and how, comparing in the same slide, how orders have played against deliveries. So in terms of the two largest OEMs, Airbus and Boeing, we have seen a contraction in the order book with lower book-to-bill ratios, 0.53 for Airbus. That's just year to date this year, and 0.42 for Boeing.
I mean, as
this year to date.
an absolute number, that's really quite, say, astonishingly low, considering that we probably had a period of, what was it, 10 years where the book-to-bill was always above 1. I mean, the OEMs just couldn't produce the aircraft quickly enough. But I think it's the last couple of years we've seen that drop below 1. But to see figures of 0.5 and 0.4 show a significant slowdown. But obviously the backlogs are significant enough that it's not so much of an issue. We should just clarify the book-to-bill then, because one question has already come in about what does book-to-bill mean. My simple explanation of that is if it's really the numbers of orders compared to the aircraft being produced. So if you're delivering 700 aircraft a year, but there's 700 orders coming in, then your book-to-bill is 1-to-1. At the moment, if aircraft are being manufactured at the rate of 700 a year, then basically we've got, if they're being produced at 700 a year and you've got a book-to-bill of 0.5, then you've only got 350 orders coming in. Is that a reasonable explanation, Mike?
Yeah, sounds
Mike is
perfect.
In agreement.
Perfect explanation.
Yeah. Thank you.
So just a couple of things to point out on the orders and delivery slide. Comac, it looks like a very low number. They have actually delivered aircraft last year and this year. It's the ARJ21 aircraft that are delivering, but it is in very low numbers. Sort of, it's getting up to around a level of 15 per year. We'll look at what the backlogs are for those aircraft in a few minutes, but it's significant. So we'd expect to see Comac trying to ramp up their production rates to fulfill some of that backlog, because they do have a significant backlog. The aircut numbers have yet to enter service, so they are zeros there.
Okay, so next section is lease ends and trading.
Yeah, so the first slide here we have is showing there's a number of trends here really, showing that both the growth in leasing and a more recent trend which suggests a number of extensions, or an increase in the number of lease extensions. You can see through the sort of early years of the graph, there's a fairly close correlation between the numbers of lease starts and lease ends, but with various factors such as the low cost of fuel, which has encouraged operators to keep flying older aircraft, and then you combine that with issues, entry into service issues, reliability issues, and then the recent grounding issues for new generation narrow body aircraft, and also issues such as the engine problems for the Trent 1000 on the Boeing 787 aircraft. Operators have kept their existing older aircraft in service for longer, and in some cases aircraft have come out from storage and being parked to add lift. So that's something you're really seeing in the last few years, where the number of lease starts and number of lease enders has diverged.
When an airline extends a lease, do we count that as a new lease starting, or do we just extend the lease?
No, that would just appear as the existing lease carrying on. Right. So
on to the narrow bodies.
Yeah, so the narrow bodies here, it looks like there's an incredible number of lease ends in 2019. We just have to mention that this is the contracted lease end dates, and not all of those, or perhaps half of those, or maybe more than half of those, would be extended. We don't always find out the exact terms of the extensions immediately, so we would expect to see a lot of those leases having been extended, maybe 2, 4, 5 years into the future, particularly for the reasons that I mentioned a few minutes ago, the grounding and some of the other issues. So you can see we've highlighted on the graph, there you go, the where we think that the extensions will push that wave. We've been calling it a bow wave of lease returns. So that will push those, we expect, into the mid to late 2020s, and there'll be various effects that can have on the existing generations of aircraft.
And I think an important thing here is, I mean, obviously the 2019 lease ends. I mean, really, they would have been sorted out by now. They would have been extended earlier in this year, or perhaps even last year. Some of those aircraft will be redelivered, of course. But if we look back historically, I mean, the numbers of lease ends, you could say, is reasonably constant between 2008 and 2018. You know, it's somewhere between 500 and 600 a year for the leasing companies to manage. If you look at the next 3 or 4 years, there's at least 800 aircraft which have lease ends coming up. That's a considerable amount of work for lessors to be either extending or taking delivery, and it's an enormous amount of work for the airlines to take on. So we are expecting the results of our redelivery survey in the next few weeks, I believe. So it'll be interesting to see how the lessors and lessees see each other's positions as they enter what I would say is an incredibly high resource period over the next 4 to 5 years with either lease extensions or redeliveries. And the wide bodies look similar in a way, Mike. We had a peak in 2019, but as I say, we've seen probably it is a tougher exercise. I imagine the lessors really don't want those wide bodies back. They must have been doing their utmost to extend leases.
Yeah, well, it's not as extreme a wave as you might observe on the narrow bodies, but then I think owners and lessors of wide bodies will probably be glad of that for the reason that you mentioned. So the proportion of aircraft that are leased isn't quite as large. The number of aircraft in the market isn't quite as large, but you know, we have identified some types which are either under some pressure or, you know, maybe under increasing pressure over the next few years. 777-300ERs, you know, there's high cost of reconfiguring. We have seen them being moved into new operators, but the lease rates aren't perhaps as high as we would have expected a few years ago. And you know, as more of those aircraft come to the market, we'd expect those rates to come down. There's been lots of news and discussion around the A380 and increasing numbers of operators publicly announcing their plans to move away from them or return aircraft off lease or take them out from the fleet. So we're expecting to see values come down of those in the next few years as well.
We've had another interesting question in. Actually, somebody has said, does IQ break this down into regions? Because I think that's going to be a key factor with, you know, where are these wide body lease extensions coming up? And I mean, I'm guessing, I haven't got IQ open in front of me, but there's probably several Middle East carriers who probably will actually return some of these wide bodies now because of the the lower growth expectations in that region. So although I can't back that up with IQ data right now, I think we could be looking at splitting this out into regional areas of focus, because I think that's going to cause a big demand in the MRO sector as well for these reconfigurations of wide bodies that are going to be required.
I think especially with the wide bodies, looking at it from an airline point of view, from a region point of view, and also from the engine types that are installed on those aircraft, you can split all of that information out with the IQ, as well as valuing the different engines and different configurations. So that's something we can do.
Thanks. So leasing activity.
So in the leasing activity, we are showing lease ends and percentage of the fleet with lease ends, and again, it's showing the downward trend there. Also looking at sale leaseback transactions and the number of lease starts that have happened. So that's just new operating leases, either from speculatively ordered lessor order books or secondary market leases that have occurred. We have seen the number of sold and leaseback transactions decline this year. This is only 2019 year to date versus the full year 2018. But you can see by the size of the bars, especially on the sold and leaseback transactions, that it's not going to get to where it was last year unless something dramatically changes over the next few months of the year.
I suppose that surprises me a little bit, because I've tended to think through these things fairly simplistically, that as airlines head towards pressures on costs and cash, that the sale leaseback is a great option for them. So I would have thought intuitively over the last year we may have seen an increase in sale leaseback, but I suppose we should wait to see how the year ends, because there might be some sort of last quarter focus on sale leasebacks. I'd have thought the appetite is quite strong amongst airlines. There's still a strong appetite amongst lessors to do sale leasebacks. So I'm a little surprised that the sold and leaseback category is somewhat. I know it's only sort of 8 months through the calendar year, but it'll be interesting to see how that ends up at the end of the year. And likewise, wide body, that's a much smaller percentage compared to last year in terms of sale leaseback. So yeah, I think that's a sign of the times, really, that there's not a clamour for those transactions at the moment.
Yeah, definitely on the wide body side. I suppose on the narrow body side, the MAX and the aircraft not having been delivered, a lot of those might have gone into a sale leaseback transaction, but the wide body side is, it's very much lower than last year. And
if we had a graph showing the rate of slowdown of progression through the graphs, I think we would be dropping off way too slowly now, Mike. So I think the next one, the trading activity kind of follows that leasing activity. So I think we should head into airline failures.
Okay, let's do that. So this is a chart that we've shown a number of times before, and we like to look at this because it tracks the correlation between fuel price, the highest cost to airlines, and the number of failures and the number of aircraft that have been involved in those failures, and we can see that there's a very close relationship between fuel rising and airlines going into insolvencies. We've seen quite a sharp jump up at the start to the 2019. 15 operators having failed there. We show a number of those operators: Germania, Flybe, WOW Air, to name a few of those. And we can, although we have seen leased aircraft being returned or repossessed and coming out of Jet Airways, this chart doesn't show those Jet Airways aircraft. But if we move on to the next chart, we can see what that will look like when you include the Jet Airways fleet, and that really emphasizes the uptick that we're seeing. And it's not just fuel that's playing into these bankruptcies, the strong US dollars having an effect as well. But you can certainly see a number.
So we were just really being polite, are we? The fact that because Jet Airways hasn't formally liquidated, we're just being polite. But we know that lessors have got their equipment out, and there's just a couple of handfuls of aircraft remaining, which may or may not come back into service. But I think,
yeah, I mean, it's the technical being polite, as you say, but there's no aircraft flying with jets, so they're not operating.
I suppose the concern is now the list of potential airlines that are going to have to go through some heavy restructuring or worse is probably increasing at the moment. What does the next slide show us, Mike? Trends in European airline failures.
So there have been a number of European airline failures over the past couple of years. So we just wanted to show the timeline for when those operators have failed. The earliest one on our chart there, Air Berlin. We saw a number of aircraft coming into the market which were placed relatively easy and quickly. Then Niki, Germania. I just wanted to point out we have Fly BMI in there. It looks like Fly BMI only started in August 18, but it was BMI regional before then, which is why it's not showing that on the chart. But that's one of the most recent ones to have failed on this chart that we're showing here. We wanted to just have a look at what's happened to some of those aircraft and where have they gone. Looking at some of the types of aircraft and which operators they've transitioned into. So Fly BMI, all of those aircraft have gone into Loganair. They're relatively mature aircraft, average age of 19 years, and they went relatively quickly into Loganair. WOW Air, so that was an operator of narrow bodies, 320 Neos, 321 COs, 321s, fairly young aircraft. Those went fairly quickly into Thomas Cook, Condor, the sort of European leisure tour operator. Owner Air, which is a Turkish low-cost, Air Canada Rouge, and Vistara. You notice when you're looking across these airlines and where the aircraft have moved to, a lot of the aircraft are moving into European or North American carriers, and maybe a couple of examples of Asian carriers, but that's reflective of a trend that we've seen recently in the market. There's a lot of carriers tend to move from Asia back into Europe.
And how do you think, I mean, this could get a very complicated answer, but generally speaking, do you think lessors have been happy with the rentals they've been achieving, or has it been more a case of let's just get this aircraft placed because we don't want it sitting down as inventory? So do we think there's been a reduction in the lease rates that have been achieved? I mean, it would seem logical for me that that's probably what happened.
I would say that it would depend on the aircraft type that you're looking at. Some of the operators like Air Berlin had some wide body aircraft, so the lessors there had some exposure to those. I would say probably on those wide body types, there's been more of a knockdown on the rentals that have been achieved. And the aircraft on the narrow body side may not have gone out on the same rentals that they were on originally with those carriers, but I don't think we've seen really significant pressure on the lease rates and values of those aircraft resulting from those failures.
Yeah, and I think we've got some notes there about some of the Germania aircraft were parted out. I think they were some tired aircraft in there that were probably not worth reinvesting in.
No.
So moving on to the analysing metrics, what are the takeaway points from this slide, Mike?
So we're looking at the sort of proportion of aircraft that are exposed to failures, how many are owned versus how many are leased. And I can see that there's quite a high proportion of aircraft are leased at the time of failure. We're showing this in two ways. The top graph on the left is showing jet fuel price versus the percentage of leased aircraft or owned aircraft at failure. And you can also, on the second graph, you can see that's the SDR, the US dollar, the special drawing rights, so showing the strength of the US dollar. And you can see that both of those are showing a higher percentage of leased aircraft, or operators with a higher lease percentage will suffer most when you have a strong US dollar and a high oil price. The high US dollar is effectively increasing the rates for carriers that are not earning in US dollars, but obviously having to pay out those lease rentals. So if you have high exposures there, that's leading to more focus.
But it's also saying airlines with high percentage of leased aircraft are potentially weaker credits. They've got less to fall back on.
Yes, and potentially younger carriers or carriers that are more vulnerable.
I'm hoping that comment might provoke some questions or comments, just to make sure you're keeping track with us.
We invite those.
Airline survival. Sorry, you back on the which classes of aircraft are more exposed?
We just wanted to mention, because we wanted to add a little bit of a regional flavour, that the turboprops have tended to be more sensitive in the lower fuel environments. They tend to be more popular in high fuel environments, and there is a case to do with the operation of those aircraft and the markets they serve as well, which tend to be more active in a high fuel.
Okay, and that US dollar rate, is that compared to euro? Something? Do we know what that on the lower left slide US dollar rate, is that to the pound? Or is that
it compares it to a basket of other currencies, so it's not a specific currency, but it gives
like
you
a blended exchange.
Yeah, it's something that the IMF uses to compare.
Comparing the Argentinian peso to the US dollar, it's going to be much more drastic compared to the euro, for example.
Yes,
okay,
very much so.
Okay.
The next graph shows that as well, that US dollar SDR is on the yellow line, and we've compared that with the average service life of the failed airline from launch to when it collapsed. So you can see that the stronger US dollar has affected younger airlines, and that goes into the point that you were making, Phil, that perhaps those are airlines which have a higher proportion of leased aircraft and are more vulnerable against some of the more mature carriers who might be in a stronger financial position.
I think the basics are, and I think we brought this out in the Newswatch we put out a week or two ago. A UK airline that signed a lease 5 years ago or 4 years ago, sort of pre-Brexit referendum, for every $100,000 of lease rental, it would have had to have found £66,000. Now it would need to find more like £88,000. These airlines just can't put their fares up. So where can they save money? Some have managed to increase some of the revenues from the ancillaries that we mentioned, but it's just an example of how tough that environment is when we're in a US dominated market. Okay. Some storage analysis now follows, and we're at slide 28 of 48, so we're failing miserably on the time per slide metric. So
they do get somewhat quicker as we go.
A lot of these look like they're bedtime reading material for the people listening this evening. Mike, what do you think?
Very complimentary, Phil. So the aircraft storage shows generally storage levels have reduced over the last year or two. Notably, we've seen some of the turboprop storage, which had been increasing, has come down. That's through a mixture of retirements, conversions to freighters, aircraft, returning to service. We've seen wide body storage come down as well. Some aircraft have come out of storage to support the engine issues that we've mentioned before, and then the narrow bodies we've mentioned the older aircraft and the strong demand for the midlife. So that's the main points we were making with that.
Yeah, that's somewhat surprising. I know we've got some of the issues we've had over the last few months with MAX, but I think considering those rates of wide bodies, the dotted sort of blue line there, I would expect that to be increasing in the next year or two, but just a personal point.
Yeah, we could well see that. I mean, just to point out, regional jets and turboprop storage levels are still high. So they come down. We're looking at the age groups now and how those have changed over time. Naturally, you'd expect that the older aircraft, that's the grey bars at the top, would be larger than the younger aircraft. You wouldn't expect so many young aircraft to be stored. This year, obviously, with the grounding of the MAX, we've seen the number of young aircraft stored increase. This only includes aircraft that have been delivered, though, so aircraft that are still with manufacturers and haven't been delivered yet aren't in those charts.
Yeah, what would that look like then if it was normalised? I suppose we just reduced that more to a 2018, the darker blue at the bottom.
It would be, yeah.
It would be, so actually...
then you might have this pale green band in the middle might be a bit larger because those aircraft might not be operating in lieu of the MAXs. So that's how you might see it shift.
I see we've got a section here on the on our opinion of the MAX update. So I think we can go through these relatively quickly, but still MAX is being produced and quite a few numbers sitting on the ground at the moment.
Yes, that's right. So the light blue on the left-hand chart shows the aircraft that had been delivered and are grounded. So they're with their customers, with their airline customers. The aircraft that have not been delivered, there's around 238 of those to the end of August. There's still 200, well, not 200, there's still 42 per month being produced at the moment. And we're expecting that rate to continue sort of through the rest of the year. So over 600 aircraft.
Yeah. Okay.
And we were having a look as well at the backlogs, just comparing the 320neo family with the 737 MAX. Not drastically different distributions in terms of the regions. We would say that the A320neo has a bit more traction and a bit more backlog in Europe and in the Asia Pacific regions. And overall, it has a larger backlog at about 5,700 or close to versus 4,400 for the MAX family.
Okay.
The next slide sort of emphasizing again what we mentioned in terms of the production rate. It's 42 aircraft a month at the moment. Once the aircraft is allowed back into service, we expect to see a ramp up, and we're expected to see that next year, maybe mid-year, with deliveries rising in the middle of the year. But it's still a little unclear as to when the aircraft will be coming back into service and which world regions. Presumably the FAA and the aircraft will start flying first in North America, but how the other regions certify and return the aircraft to service, we'll have to see how that plays out.
Yeah, I think that leads nicely into the next slide, which is new orders since the grounding. So I suppose it was the IAG order for the MAX that sort of made the headlines back at the Paris Air Show, that despite the grounding, there's still confidence in the type. So I'm wondering if that, I mean, assuming that the MAX gets back in the air in the coming months and becomes acceptable on a global scale by other authorities, next year will we see a bumper order book for the MAX once it's back flying again? So I imagine a lot of airlines are actually sitting there thinking at the moment, let's just wait and see how this aircraft gets back into the air.
Yeah, I think there's definitely a wait and see approach. That's probably why we've not seen that much activity while the aircraft's been grounded. We do know that there are a number of aircraft that are being built in sort of lessor specs. So we might see, we might have to see some of that lessor order book placed. There'll be maybe some opportunities for airlines to acquire aircraft that way, but we certainly expect to see things pick up a bit once the aircraft is flying again.
And our next slide, is that actually, this is our estimate, is it then, Mike? It's the MAX delivery resumption in the fourth quarter of 2019?
Well, that was a question that we're sort of posing and wondering whether that will be achievable. We know that Boeing's doing everything that it can, and to see if they can get that done. I mean, it's unlikely that it'll be a resumption in deliveries across the globe. I think it'll have to be phased by jurisdictions. Some may want to do further diligence of their own. So
yeah, and I think the message is sort of loud and clear that the resumption of the aircraft that have already been delivered, were already in service, they're going to need to be taken out of storage. That is going to be a big process in itself, as well as then delivering the aircraft that are out of production, that have been stored, let alone resuming, normal service. The disruption is going to take, years to sort out rather than months.
yes.
So we're on to section 7 now, Mike, the regional market update. I'm just looking across to our crew for time. We're doing okay. Slide 37 of 48. What are the takeaways here then, Mike?
Yeah, so we're looking at regional jet deliveries. North America, the key market for the regional jets. We have seen some sort of slowdown in the last few years in terms of the number of regional jet deliveries. When you look through 2016, 17, 18, we have seen those numbers decline. We've seen new aircraft types coming into operation, the Embraer E2, although the aircraft, the 175 E2, which was more, you would think be more suited to that market, doesn't fit within the scope clauses. So we're still seeing E175 E1s delivering into USA. We have seen some slowdowns in terms of the number of aircraft delivered.
Okay.
But as you can see, a large number of aircraft types available. The E2s, the existing generation delivering as well. You've A220-100s, which we're including in the regional.
I think we're going to get a lot of questions
well.
about that, Mike, that the A220 is not a regional jet, that it's actually a standard narrow body. But I look forward to seeing the comments from the audience on that point.
Yes, it's.
What about the 220-300? Would we have included that if they'd been delivered?
If only we had a polling question that we could ask people. Maybe we'll have to put that on the next one. But personally, I would see the 220-100 more as a regional jet and the 300 more as a narrow body. But I'm sure many would disagree with
hedging your bets.
Yes,
a good
on the
way
fence.
for an appraiser to approach everything in life. Okay. And turboprop delivery trends. I mean, you mentioned that the ATR has picked up in terms of orders, but that was from a pretty low base, wasn't it, really? It had an awful couple of years.
It has since, what would it be, 2015, we've seen deliveries reduce. ATR has moderated the production rate to try and counter some of the market effects, one of which was a large number of speculative lessor orders. We're starting to see those orders be delivered. There's fewer, from what we're hearing, aircraft delivered without homes in sort of the future delivery schedule. So it's a slow process, but there are some good signs for the next few years.
And are the lease rates holding up? I mean, I think some of the lease rates we were seeing on aircraft that had been taken out of the likes of Kingfisher a few years ago. Initially, it was great, but then there was a bit of a drop in demand. So I'm assuming we're going to see some sort of recovery.
Yes, I think we're seeing some stabilization, and maybe we'll start to see a bit more of a recovery over the next few years. But there's a lot of aircraft stored still, and it'll probably be the younger, newer sort of generation aircraft that will recover more quickly, I'd expect.
Okay. I think I'm going to speed things up a bit. There's a lot of data here on the current RJ and turboprop fleet distribution. I suppose, surprise, surprise, the regional jets dominated in terms of the North American market as the feeder network into the bigger carriers.
Yes, very much so. Aircraft like the CRJ 700 is very US dominant aircraft. E175 very popular in the US as well. Some of the larger aircraft, like E190s, will have a wider distribution. Turboprops, when you look at it, is very popular for the Asia Pacific market and the European market, followed by North America. It's more for some of the Dash 8 aircraft in operation with the likes of Horizon.
Okay, so that slide that we did a quick resume on, there's more detail on the second slide, which is the regional jet fleet and operators by region, and we've done further analysis on the next slide, which is turboprop fleet by region.
Yes.
But I think we've already done a summary of that, Mike, so I'm going to
let's
go on to backlog orders.
Yes.
That's fine with you?
Yes, certainly. So the order backlogs for the regional jets and the turboprops are somewhat similar to the distributions that you saw in the current fleet. So turboprops, very popular in Asia Pacific region. They're also Europe and CIS, but I see the population of aircraft in Asia growing. That's what you're likely to see as the backlog is delivered there. The regional jets, North America, you can see is very popular there. When we look at the number of aircraft models on backlog, we can see that the ARJ21 is leading in terms of the sheer number of orders per sort of aircraft model. That's the Comac regional jet aircraft, and we've seen a recent commitment, a large commitment of over 100 aircraft for that aircraft model. We have to mention though that the operator base, or the customer base, should I say, outside of China is pretty much non-existent. I think Mongolia has a number of aircraft for Genghis Khan Airlines, but it's very much a China-centric aircraft. It has a very low production rate at the moment, but with the C919 around the corner, we might see some orders convert to the larger aircraft. So,
okay. So now we're going to do a bit more of a summary by sector, last couple of slides, yeah, back to a narrow body summary there, Mike.
Yeah, so with the max grounding and some of the other factors we've discussed, low oil price for the past few years, we've seen strong demand for the midlife aircraft, Airbus A320, COs, the 737-800 and the 321. We're starting to see some freight conversions for those aircraft. The 321 program seems to be gaining some momentum with BBAM joining there. We've got the A320neo. We're seeing that performing well. We've seen some evidence of recovery in lease rates of those aircraft as well for the newer aircraft. So those are starting to edge up, which is encouraging. As you mentioned, Phil, we had the aircraft coming out of Jet Airways, the leased aircraft, 737-800s. Those seem to be in place relatively quickly. We've seen some going into GOL and another couple of airlines. And so that seemed to be moving, which is good. The MAX remains grounded. We've mentioned that. So our values are in a sort of stasis for that aircraft. We're using more of a base value concept, how we're thinking about that at the moment while the aircraft is grounded. For the A220, we're seeing that aircraft gain momentum as well. The 300 is embedding more into the market and getting more acceptance. We've seen some orders converted from the 100s to 300s from Delta, so that 300 seems to be the sweet spot aircraft for that type. We expect to see that continue going forward. We haven't really mentioned much on the middle of the market. Airbus has launched its XLR recently, and that's gained some traction and picked up maybe 200, 250 orders and commitments there. We purposefully have steered away from the NMA because we're going to be doing a separate piece on that in the coming weeks, so discussing what we think the market size is.
Okay, we've had 6 questions on that actually, so we'll have to defer to the next webinar.
Yeah, we'll have to defer on that one. We've seen some fleet exits as well on some of the older aircraft. The MD-80s, as AA has moved out of its aircraft, and the fleet with Delta is gradually in decline. But generally, we're talking about narrow bodies in a positive light. Values are performing well. and we've seen some positive movements in terms of the market to base value relationships on a few of the aircraft models. So some positive stories there.
And how positive is the wide body summary then, Mike?
Maybe not as positive as it is for the narrow bodies. That's maybe not such a surprise, but the 787s and the 7878 or 787-9s, sorry, there's a lot of 8s and 7s in there, and A350s, we're seeing those as the strongest performers. Lots of demand for those aircraft. A330s, existing generation, the COs, we have seen the levels of storage reduce. We're still seeing some sort of pressure on the lease rates and values of those aircraft, but relatively stable for the moment. We spoke again about the 777-300ER and how we're expecting to see more of those aircraft coming into the market over the coming years. The new generation of the 777X, that has unfortunately suffered some delays due to sort of engine issues on the GE9X, and also one of the cargo doors popped open on a testing under sort of high loads, which we have to emphasize, but that's perhaps delayed slightly the entry into service. It's more so the engines though that are delaying that. And the older aircraft, 340, 500, 600, value is very low on those. We've seen the fleet half, the active fleet has halved in 5 years. So quite a sad story there. And the additional fleet exits are doing no favours to the A380.
Okay. Regional jet summary.
Yes, as we mentioned, there's a large number of options and aircraft in the regional jet market. We've seen Azure recently accepting its first Embraer E2s, which is good to see that aircraft in service. We've seen a relatively slow pace of orders for the E2 models, but as we mentioned, we've looked at ATR and Embraer. Some of the orders are starting to pick up, and Embraer have come out and said they do expect to see more orders over the coming months. So we might see some pickup there. There is some M&A activity ongoing in terms of the CRJ program having been acquired by Mitsubishi Heavy Industries. We've seen the sort of relaunch of the MRJ, now the SpaceJet program, with a significant commitment for the M100 aircraft, which looks like it will fit very nicely into the US market. So that's an interesting space to watch as well in terms of the scope clause. Thanks, Phil.
Okay, that's what I'm here for.
Okay. Unfortunately, the Superjet 100, however, has been struggling in the market. We've seen the Interjet fleets pretty much out of service, and the operator base is really retracting into its home market, which is Russia. We're seeing some of the older aircraft, 146s and RJs, they're sort of continuing to exit some of the fleets as some of the operators are moving into newer types.
Okay. I think our last summary is the turboprop summary, and then I'll just run through a few of the questions that we've had as a sort of a wash up. That's okay.
Yes, so really just to summarise on the turboprops, as we've mentioned, we have seen some pressure on the values and lease rates of those ATRs and Dash 8s in recent years. We are starting to see the level of stored aircraft decline. However, it's still at high level, but we're starting to see it decline. The low fuel and the high number of lessor orders has made competition in the market to place those aircraft. And as you mentioned, Phil, the lease rates had come down significantly. But with ATR moderating production levels and the smaller lessor order books, now we expect to see some recoveries. Things are starting to stabilise in the market. So I think our outlook for these aircraft for the coming years is more positive than it has been the last few years, which is good to see.
Okay. Got a couple of questions which we'll run through. Actually, we've had more than a couple of questions. If I don't get around to answering them now, then we'll get on the email to those of you who've asked the questions. We had quite a few questions about our views on the MAX. We do have a section in here. I think maybe these questions came in before we covered that. I think from the valuation perspective, our view is that there's a time and a place for the ISTAT base value, and this is one of those. The assumption is that there is still a massive backlog. We expect there could be some cancellations, as there are with any programs, and the narrow body sector could be under some pressure, from a macroeconomic perspective. But with sort of 4,500 aircraft in backlog, when we're looking at base value, that is still a significant number of aircraft that mean it's a robust program. In terms of the global acceptance, we know that different aviation authorities have a different view, and that maybe they're not going to rubber stamp the FAA process. But we don't see any particular reasons why they wouldn't follow the FAA, but it may not be immediately. It may be a few weeks or months later. So I think that sort of global acceptance, and then the general public picking up on that, we do expect confidence to come back over time. So we've not made any impact in our long-term base value, and as far as we understand, other appraisers haven't either. Just changing tack a little bit, one of the questions we had was, will lease rate factors need to increase substantially for the sale leasebacks to really increase? This was the comment I had about, I would have expected there to be more sale leasebacks to happen. So I think maybe this is pointed that because there's so much competition amongst lessors, that they're seeing the returns on those investments not actually work out correctly. But I think it kind of works the other way for the airlines. They're still being offered sell leasebacks with lease rate factors of below 0.6 or perhaps 0.5. So I still think there are willing lessors out there who will do the deals at that rate. So I don't think there's an issue with the supply in terms of or demand from lessors willing to do deals. I just think it's a function of where we are with the airline finances right now. So I think as far as these questions go, I've kind of come to an end there, and I'm going to hand back to Mel for some closing comments.
Yeah, lovely. Well, thank you, Phil, and thank you, Mike. Some very interesting content that was covered there today, and I hope all of you that have been listening in have found that very useful. For those that were particularly interested in the regional market, I know there's been a lot of expressions of interest on that. We will probably look to do a sort of a separate piece on that to expand on the slides that Mike's pulled together there. I think the only other sort of point I wanted to make was just for those of you that haven't trialed IBA.iQ, our data intelligence platform, please do. You can sign up through the website. We have launched a new module, an engines valuation module called IQ Engines, that includes 300 plus commercial engine modules, and that platform offers values and lease rates. And finally, on a housekeeping issue, we will be sending out a copy of the slides that will go out to you in the next 24 hours. And if you do have any other questions, please do drop us a line. Our email details are on those slides. So on behalf, I think, of myself and Phil and Mike and the team here, we'd like to say thank you for joining us today, and we look forward to engaging with you at our next webinar in the next few weeks. Thank you very much. Goodbye.
Thank you.
Bye-bye.
Bye-bye.